Hello and welcome to the news button. President Trump has been touting what he calls Liberation Day as a key milestone for the US in its fight to make foreign trade fair. The Trump administration has fixed 2nd April as the D-Day for imposing huge and widespread tariffs on imports from several countries. This has tossed the global markets into the womb of uncertainty, and the investor community is gasping to cope with what is coming. Because of Trump's mercurial nature, market pundits are not ruling out something very dramatic, something very cataclysmic, something very injurious to the global trade. So the question is, will Trump's tariff proposals trigger a stock market crash on 2nd April? That is today. Well, the US stock market performance in the last 5 weeks shows that the stocks can move in either directions. Although Dow Jones Industrial Average and the broad-based S&P 500 and the tech-focused Nasdaq Composite still remains firmly in bull markets, the S&P 500 and Nasdaq Composite did dip at least 10% from a recent high. So what is this Liberation Day and what does it entail for investors? Trump wants more tariffs on imports from foreign countries with a goal to protect domestic jobs and make domestically manufactured goods more price competitive. If finished goods imported into the US becomes dearer, it will force businesses to shift their manufacturing base to the US to stay competitive. Otherwise, the tariffs are expected to win away American consumers from foreign goods and in turn buy American made goods. Thus, April 2nd will be the date when Trump will impose potentially broad ranging tariffs on countries that have so far persistently maintained trade imbalances with the US. What's more worrying is the situation might get worse than expected. Although April 2nd might see sweeping global tariffs from Trump, reports from major US media outlets like the Wall Street Journal and Bloomberg convey that tariffs will be far more targeted than initially anticipated. Now let's analyze how will Trump's Liberation Day impact the Indian bosses. If you look at the historical charts, it's clearly visible that the Nifty 50 index has posted positive returns in April in 9 out of 15 years. But the index has posted a weaker performance in April when it is preceded by a strong March. Let's dive deeper to find out how past market behaviors and current economic conditions together may shape market performance in April. From April 2024 to September 2024, the Nifty 50 surged 17%. Then it went for a stiff decline between October 2024 and February 2025, losing the heavy gains it has made. In March 2025, after a stiffer market correction post a overheated market, the Nifty 50 made a strong recovery and is looking around 23,610 currently. A good 38.2% recovery from the preceding decline. Let's not forget, April also represents the beginning of a new financial year. If you look at the SIP contributions, you will notice that over the last 5 years, SIP contributions in April have decreased 4 out of 5 times on a month-on-month basis. On the other hand, March has been higher. March has seen higher SIP investments as people jostle to make last-minute tax-saving investments to avail tax deductions. Also, a look at the net inflows from FIIs tells that inflow from foreign institutional investors have been negative in 4 out of 5 Aprils in the last 5 years. April also happens to be the corporate earnings season. Companies report their quarter 4 earnings and annual earnings starting April each year. It's a no-brainer that these corporate results will impact the stock markets. If a forecast by a leading rating agency is to be believed, then there could be a good 7 to 8% Y-on-Y corporate revenue growth in quarter 4 FY 2025, primarily driven by a rural demand revival and an increase in government spending. The recent RBI actions, like the recent rate cut by 25 BPS and the $10 billion rupee swap, are expected to make borrowing cheaper, which will increase liquidity in the market and spur consumer spending. President Trump's tariff uncertainties remain a big concern though. Trump is anticipated to introduce reciprocal tariffs in India, where the average tariff stands at 12% against the US's 2.2%. To avoid a Trump backlash and protect its exports, India is weighing options, including lowering tariffs on US exports. This tariff uncertainty is likely to spark volatility in the Indian stock market through April. Thus, you can assume that the Indian bosses are all braced up for heightened volatility this April. This optimism over government initiatives will now clash with global uncertainties due to Trump's tariff gambit. Let's see who comes out the winner. If the market comes clear of the Trump threats, it will be the beginning of an India that is economically more resilient. Hope you liked the video. If you like the stuff, please like and subscribe to our channel. Thank you. Thanks for your support.